But first, rebuilding Wells Fargo. More than a year and a half of scandals, including fake accounts, unfair mortgage fees, charging customers for needless insurance, led to the Consumer Financial Protection Bureau to levy a record fine on Wells. Now there are questions about the bank's 401k practices. Maria Bartiromo sat down for an exclusive interview with the CEO of Wells Fargo, the president there as well, Tim Sloan, to find out what he is doing to change the culture at the nation's third largest bank.
There has been a lot going on since I stepped into this role about 18 months ago. One of the things that I said to all of our stakeholders is that we need to rebuild our reputation with all of them. And first and foremost, it was with our team members, with our customers, but it was also looking at all of our policies and practices to make sure that we were doing the right thing, which is what we're in the midst of doing. So some of the items that you mentioned, in fact, all of them, were items that we found, right? We raised our hand, we escalated, and we're remediating our customers.
Well, not the fake accounts.
Well, where we are in terms of the accounts, the retail accounts that we sold to customers that maybe they didn't need, we're in the midst of remediation. We've reached out to over 120 million different customers to say, hey, if you have an issue with the Wells Fargo account, come in and see us. And we're almost all the way through that process.
You have dismissed people. You have had some people leave the company. Mm-hmm. You have put a new slate of board of directors in place. You've made some changes, but there's real reputational risk, mm-hmm. and there's risk in terms of people trusting the bank again. Mm-hmm. How are you going to get people to trust Wells Fargo again? Convince them that the bank has integrity and these things were one-offs.
Well, the fact of the matter is people trust us every day. We have over 70 million customers. Our business is growing. The retail banking business is growing. Products and services are growing. The loyalty scores that we have from our customers are all improving. So there's a lot of good that's going on at the company. But you're absolutely right. We need to rebuild trust with our stakeholders. So how do we do that? We make sure that if there's anything that we did that was improper with a customer, that we make it right by them, that we fix anything that needs to be fixed at the company, and then we focus on going forward, and that's building a better Wells Fargo, and we're doing that every day.
At the same time, though, you've got to convince clients not to bolt.
Yeah.
And as I hear it, or I understand it from various customers and analysts, small businesses leaving, customers are closing accounts, they don't trust you anymore.
Well, that's not true, right?
Okay.
If our retail checking accounts were not growing, then that would be true, but they are growing.
Okay.
If our retail deposit base wasn't growing, that would be true, but it's actually growing. Our commercial loans grew in the first quarter. Our overall business is growing, right? There's no question that we have some work to do with some of our customers, but when I talk to our customers, and I do that every day, right, they like the relationship that we have with Wells Fargo, but we need to continue to ask more of our people and ask more of our company to be able to deliver the products and services that our customers want.
But Tim, perhaps even bigger than all of the above and and the misconduct that we're talking about is the Federal Reserve ordering the bank not to grow anymore. You cannot increase the size of your balance sheet beyond $1.95 trillion. So what do you do? Is that a death knell that Wells Fargo is not allowed to grow anymore?
No, of course not. What the Federal Reserve said is that we can't grow our balance sheet. We have almost a $2 trillion balance sheet at the end of last year. The underlying company is growing. As I mentioned, when you look at almost every statistic in terms of our underlying business, you saw growth in the first quarter, and so we're proud of that. So we just need to balance being able to operate underneath the asset cap that we have with the Fed and also service our customers. We're absolutely open for business. But what the regulators want for us and what we want are the same things. We want to have the best risk management in the industry, and we're going to do that. I made that one of our 6 aspirational goals a year ago.
What can you tell us about this 401k inquiry? Were your people pushing people with 401ks into more expensive funds, into funds that obviously give the bank more fees?
I can't say a whole lot more of that. We disclosed that in our 10K a month or so ago, so it's not really new news. We're in the midst of a review of that. If it turns out that any customers were moved into an account that was inappropriate, we'll make it right by them.
So you're still having these active investigations within the company of all of these misdeeds, the fake accounts? The auto
no, that's
business,
all done. No,
the mortgages?
All that's done. We discovered those operational breakdowns that we had. Shouldn't have happened. Absolutely agree with that. We've changed our policies, our practices. We've completely reorganized our auto business. We have a new leader, and Laura Schubach, who's moving that business in the right direction. So there's a lot of change that's going on. But in terms of our underlying review of the overall business, we're nearing completion of that.